Don't panic. How to thrive in down markets, even when you're young. Ever feel like the market is a roller coaster designed to make you sick? You're not alone. Let's talk about navigating those stomach-churning dips, especially when you're just starting out. Back in the early 2000s, I was in my 20s, making under $50K a year. I wasn't exactly rolling in dough. To make matters worse, I had over $1 million in mortgages on rental houses. Talk about pressure. Then the market tanked. My houses lost half their value. My 401k took a serious hit. But here's the thing, I wasn't worried. Not really. Why? My secret weapon wasn't some fancy financial trick. It was a simple shift in perspective. My time horizon wasn't measured in years. It wasn't tied to business cycles, it was decades. I knew the market would recover. I knew real estate would bounce back. It always does. The news is designed to grab your attention. Fear sells, but fear also makes you make bad decisions. Reacting to every market dip based on the latest headline is a recipe for disaster. It's like trying to steer a ship in a hurricane. Instead, focus on your long-term goals. Are you saving for retirement? A down payment on a house? Your kids' education? These goals are decades away. A short-term market dip is just a blip on the radar. So, what can you do when the market starts to look scary? First, resist the urge to sell. Selling low locks in your losses. Remember your long-term plan. Second, consider buying more. Down markets are actually opportunities to buy assets at a discount. Think of it as a sale on your favorite stocks. Third, rebalance your portfolio. This means selling some of your winners and buying more of your losers. It helps you stay diversified and take advantage of market fluctuations. Fourth, and most importantly, stay informed, but don't obsess. Check your portfolio periodically, but don't let the daily news cycle dictate your investment strategy. The market has seen plenty of downturns. 2001, 2008, even more recently. Each time the market has recovered. Each time those who stayed the course have been rewarded. History is on your side. Don't let short-term fear derail your long-term success. Don't let market volatility scare you out of investing. Now is the time to take control of your financial future. Start by defining your long-term goals. Then, create a diversified investment plan that aligns with those goals. If you're unsure where to start, seek advice from a qualified financial advisor. Download our free guide to long-term investing for more tips and strategies. And most importantly, remember to stay focused on your time horizon, not the headlines. Your future self will thank you.